Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to promo the week ahead, and we're going to talk a little bit about our Monday psychology, especially on a day when the markets are, in fact, closed here in the United States. Stock markets are closed. We are seeing some trade in commodities, though. That's one of those things you always have to be aware of. Remember that just because a market is closed, just because we're closed on Wall Street, does not mean that the commodity markets aren't open. And the Forex is pretty much always open for business on about a 5-day tilt, at least Monday through Friday, and then crypto is a 7-day-a-week type of thing. So we're going to go ahead and hit the high points today. Not really the session to be taking any kind of risk. We did some live trading on Friday that was great, some market profile. I got inundated with questions. How do you do TPOs? How do you do market profile? I want to do market profile. I'm like, well, I mean, you know, pack a lunch and bring a few years to get some good experience down. But I'm going to go ahead and recap that crude oil trade that we threw down last Friday, which was absolutely fantastic. It's one of those that it was really a great illustration of how deep you can go with your trading. It doesn't just have to be Fibonacci's or moving averages or realistically anything that you're doing that's simple. When we start talking market profile, we're talking volume, we're talking order flow. We're doing all the things that a lot of people on YouTube say they do. We did it for you live. So if you missed that, if you're interested in TPO charts, I'm going to go over that and go back and watch last week's session, last Friday's session, and you'll see really what I would call a premium B trade, and I'm going to outline exactly why it worked. Now, as far as what we've got going today, it's going to be a big news day. I'm going to talk about 3 key news events that we have to be aware of, and then we're going to look at our economic calendar for the week. We've got a couple of trade updates. This is going to be one of those sessions where we're going to move along at a pretty good pace. Remember, the Switch Markets newsletter will be delivered to your inbox tomorrow. If you've already signed up, that's absolutely fantastic. If you haven't, well, you're going to want to. I mean, that's absolutely one of those things that you need to. I think it's a pretty good resource. I put a lot of time and effort in on it, and this is essentially it. This is the switch on, get market clarity before you decide what to trade. This is our newsletter. It's I won't say it's a work in progress because it's pretty solid. We also have a video that goes along with the newsletter that I'll cut later on this evening, get you promoted and ready to rock for the week ahead, but you're going to be looking for that on our Switch Markets YouTube channel. So all you do is drop your email address in there. You're going to get the Switch newsletter beamed right out to your account, and it's going to be, right out to your email account, and that's going to be a pretty good way that you can start the week. Remember, it's not ever going to be out for the Monday U.S. session or the Monday UK or the Monday Asia session, and why is that? Because when we fall back on our fundamentals in our psychology, we're looking to game plan on a Monday. So typically, I'm looking to get ready to go in a big way on Tuesday. So that's always delivered to your email inbox Tuesday, and that's going to be right ahead of the UK session. So you're going to be ready to go. I always say game plan Mondays, limit your risk Mondays. We're going to talk that psychology as well. So it's good to see everybody back in the room. Happy Martin Luther King Day from Washington, D.C. Donovan, good to see you, Donovan. A lot going on here in the United States. We're going to talk Insurrection Act here in a minute. T. Marina, happy Monday. Happy Monday, T. Ice Hazy, did you enjoy your holiday? I don't have a holiday. You kidding me? I watched a little bit of football over the weekend. Could not believe the officiating in the NFL playoff games. Unreal. So many hundreds of millions of dollars changed hands, and they changed hands on one call. If you know the call I'm talking about, it was in the Bills-Broncos game, and it was unbelievable. I've never seen a call like that. The player made the catch with a knee down, and they ruled it an interception. It just goes to show you that no matter how much you know the sport, you don't know the sport. And gambling rules all. Money rules all. That's what we're doing here. We're in the markets. We are where the money is, and that is in your financial markets. So remember, a great way to start your week is to switch on with our Switch Markets newsletter. Go ahead and just hit this page. I'm going to go ahead and drop it right in the live chat right here. They've got all sorts of surveys and things. We always appreciate your input. I'm going to put this in the live chat here at the How to Trade community as well. So that's what we've got going here. So here we go. We're ready for the blitz. Ahmed, hello, Shane. I hope you're having a lovely day. I'm always having a lovely day, Ahmed. I've only had about 3 or 4 really bad days in my life. But, boy, they were bad. I remember them. Let's see. What do we got here, Lita? Good to see you, Lita. Tuku. Good to see you, Tuku. Andrea Gorwal. Always a pleasure, Andrea. And Bobby Bob. A lot of dedication in the How to Trade community. I really, you guys keep showing up every single day. And we like to bring as much value as we can. And there's a lot of successful traders that have been through the How to Trade program. There really are. I've talked to quite a few of you that have done fairly well. But remember, we're always a work in progress. We're always working towards our goals. The job is never done. The house is never built. The lawn is never mowed. we've always got things to do. So I'm excited. I'm ready to go. Week 3, 2026. Unbelievable. Team Arena, any plans on Switch Markets creating an iPhone or a mobile app? I believe it's in development, T. I believe it's in development. Let me talk to the back office. Mobile app. Let me write a note. Mobile app. Okay. I got to remember that. That's a great question. I have to check with the back office, that's for sure. All right, here we go. Let's go ahead and start with a couple of trade updates. I think that's a pretty good place to start, as good as any. US 100 in play as Iran fears weigh on sentiment. This is a trade idea that we had about last week. It really is a pretty good one. I like it. I think that we're primed up and we're ready to go. And what you have developing here is a potential retracement and a test in that bullish pennant that we have developed on the US 100. So a pullback right from above 25,000. I love that bid. This is compression. And we're starting to see the kind of compression that we saw in the gold market last summer. Now, there's a couple of things that are going to develop with this type of formation, with this bullish pennant and this horizontal compression. Number one, you could see a market reversal and everybody will say, okay, 25,000 is garbage. We're going to sell off and get some compression maybe until you get a new Fed chairman later this year. That's very possible. That's very possible. But when we see a bullish pennant like this, that essentially has developed in that 25,000 level, I'm thinking bull. It's the old Rage Against the Machine song, Bulls on Parade. Bulls on Parade. I'm looking for a bullish breakout to the top side. I'm looking for it to wipe all-time highs and wipe it that key level of 27.5. Now listen, it has not happened yet. It has not happened yet. You've got to understand that we've got to break first. We've got to break first. So let's go to the telestrator right here. So like the old football telestrators in the old days, they used to show you all sorts of X's and O's. Well, our X's and O's right here is we're waiting for that break, and then we can look to scale in on retracements. But we've got to break first. If we don't break, there is still, a very good chance that, okay, maybe this is a top. Maybe we're seeing the market set up as a top right here at 25,000. I genuinely don't know that. I'm still bullish, but I'm going to give you 3 things that could make us bearish in a big way. And honestly, they've developed over the last week or so. This is life in the Trump era. I call it Trump risk. This is life in the Trump era. The Trump administration is always doing things. They're doing things that we've never seen before. And what that's doing is that's prompting reactions from other countries in unprecedented fashions as well. So there is no more business as usual. Forget that. There is no more business as usual. This year is going to be one of those years where if you're smart and if you can look forward a little bit and think about what could potentially roil your positions and what could roil the markets, you can make a lot of money. And I'm not putting my salesman hat on here. I'm not trying to pitch you saying you need to trade this year. You need to be aware of what's going on. And I'm telling you, I am willing to throw all of my experience in there. I'm looking at things that I saw in the past that may be running some parallels. I've never seen anything like this. I've never seen anything like this in my life. So you and I are going to learn a lot together. But what one thing that the experience is going to bring to me that might not bring to a brand new trader is I'm going to know how to fall back on what I know about myself. I know that I'm not going to get riled. I'm not going to get fidgety. I'm not going to get antsy. I'm not going to chase. And I'm going to make sure that my leverage is in check. I know those things are there to protect me, and I know I can execute on that level. That's where you need to be. There's so many opportunities this year. There are. If you're in the markets, I can't think of a better year really to trade. Last year wasn't that great. It wasn't. This year, there are some events that are going to drive markets directionally, and we're going to be in a great position to capitalize, but we've got to understand that you can't just commit to a market because we think it's bullish. It's not good enough. You could easily get wiped out. This market could sell off to 22.5 before bouncing up to 27.5 by June. That could happen easily. That could happen in the next 6 weeks. So we've got to be really smart about what we do. Our entry points have to be good. Good trade location, good entries, good risk management. And then we're going to have an opportunity to kick some tail. And by kicking tail, I mean reach our financial objectives and goals. If you're brand new to the markets, you picked a great time to get in and learn. We're going to see how fundamentals drive price, and our technicals are going to make the whole thing sing, and it's going to work like a finely orchestrated symphony. It really is. We just have to be patient. That's the number one thing that we have to do. So right there, you've got the sort of my read on the US 100. We've got to make sure that we're smart about our entries. Love the bullish break out there, though. Another trade update, US dollar, Swiss franc. This is one that's going to be on the board for a long time. Unless our swing low down there at about 78.29 gets wiped out and the dollar Swissy, we're going to have a pretty good chance to trade a level right up around that 82 zone. So that was a trade idea. This one went out last, what was it? It was last Friday, I believe. We put this US dollar Swiss franc out. What you've got here is really a great chance to sell, but you can't do it right now. The market read on this is very basic. I like these trade analytics, these ideas to be easy. If I don't think it's easy, and if it looks too hard, that means that we're probably getting into the deep end of the pool. We're doing something we don't need to do. So right there's your run, there's your rotate. That's what I call a capital L formation. One more time, an L, boom. In the English language. Now, if you're talking Greek, I remember being in Greece and I looked at the signs and I couldn't make heads or tails out of any of that. But a capital L formation in the English language, it's an L. And it's not an L for loser. It's an L for opportunity. And I know, I get it. But this right here is fantastic. 13-month EMA is fantastic. Trade location right there, right around, where are we at right there? 82.15-ish, 82-ish. That's beautiful. We've got 83.53 to the top side. I absolutely love that level as well. We just have to be patient with what's going to happen here. I think the 13-month EMA is probably a great sell. We've got that trade ID up there. I believe it's about 82.09 is what my key level is I'm looking at. This could be really a great area for the market just to stall out to the bull and then sort of rotate back down. I'm not expecting a huge rally out by the United States dollar over the Swissy this year. When we get into our news cycle, which is going to be about 3 minutes, believe me, the news all points to safe haven demand. It points to gold. It points to silver. It points to Swiss francs. Fascinating stuff right here. I would be a seller up there all day long. I would much rather be holding francs than the U.S. dollar right now. That's just me. And what that means is this market may be poised to go much, much lower. And remember, when we get these big moves, it's always important, or these trends, it's always important to step back 10,000 feet, get in our way back machine and say, what happened? What happened when? Look at that. Look at that. August of 2011. What happened back then to the Swiss franc? The S&B bailed on their peg. They eliminated the peg to the Swissy, and that just shot, basic holes in everybody's valuation of the Swiss franc. Surprised everybody. That was sort of, that's why I always say the Swiss National Bank, those are the cowboys of the game. January 20, it might have been in 15, but it was right here. This was an absolute crash. This was sort of the safe haven demand. Actually, I believe this right here was when they abandoned the peg, was in 15. So, excuse me, I spoke a little too soon there. But August of 2011, clearly the height of that global financial crisis. Swiss francs were very, very valuable. Everybody wanted the franc. Nobody wanted the dollar. And then right here, I believe they abandoned the peg in 15, I think. Don't hold me to that, though. A lot going on today, so I could be wrong. Like I said, if I don't know, I won't BS you. But one of those two moves, I believe it was 15 if I had to bet on it. In any case, where are we now? Well, we're beneath 15, and we're getting right down to those global financial crisis levels. So you're in an interesting position here, and a lot of this has to do with World War. A lot of this has to do with geopolitical strife, and everybody's saying, maybe it's better to hold Swissy. Maybe it's better to hold Swiss francs. It's not a new idea, guys. It's not a new idea. For the last 100 years, people have really run to the Swiss franc as a safe haven, and that's a lot. It has to do, it goes back, this I do know, it goes back to the Napoleonic era, and one of the areas in Europe that were insulated from Napoleon was what? It was Switzerland. Why? It was the way that the topography was really designed. It's inside of a mountain range, very difficult to take over by ground, and back then there really was no air support, so that's where sort of the roots of Switzerland as a safe haven sort of that's where that idea took root. It was during the Napoleonic Wars. So feel free to get in your way back machine if you want to do some market research and look at it. But that's why we value the Swiss franc. That's why the Swiss franc's always been a safe haven. Back in the 80s, the 90s, a lot of the pit traders, I knew a few, they would make big deals. They would be on a plane to Switzerland with checks in their hands. Their money would go in Swiss bank accounts. Why? Well, some of it was to escape taxes here in the United States, but a lot of it was just to diversify their holding. Remember, at that level, when you've got a few $1 million in the bank, or maybe 20 or 30, you've got to diversify. You don't want to be in U.S. banks exclusively. You want to be in banks around the world that you deem safe. Switzerland's always been a big part of that. That's why, as the Trump administration came in, we knew there was a lot of changes on the horizon, and a lot of people said, screw it, I'm just going into the Swissy, and we'll worry about it later. Interesting stuff, guys. Interesting stuff there with the Swiss franc. If you read the history of the Swiss franc, it's very, very, very interesting. Okay, I'll get to your questions in 1 second. I want to just line out week 3 here. Monday, Martin Luther King Jr. holiday. The markets are closed today. You're looking at U.S. stocks being closed. That's absolutely key because when we're looking at our analytics for that U.S. 100 and also our U.S. 500, not a whole heck of a lot going on. Now, one of the big things that you have to understand is when the market is closed. When the market's closed, it doesn't mean that the derivatives stop trading. We're looking at CFDs right here. As you can see, a significant gap down in the U.S. 500. That really sort of speaks down off about 0.95%, right around 68.74. This zone right in here is exactly what we saw today's trade develop into. Now, we had some futures trading earlier today on a brief, sort of a halted exchange day on the CME. So we saw a lot of things happening in commodities, a lot of things happening for your stocks, your stock index futures, but it's not a full session. The other thing to remember with the futures contracts, today there's going to be no settlement. There's no settlement. Remember, what you're going to see there is you're going to see one bar on your chart for your daily is going to run all the way through Tuesday's session. It's going to mess our technicals up a little bit, but don't worry about it. We're going to be okay. We're going to look at Monday, Tuesday range. We're going to be in a great position to trade. Remember, abbreviated sessions, low participation. You're not going to be looking at the technical analysis of today's session with as much confidence as, say, last Friday's or Thursday's. Why? It's a truncated, abbreviated session. Volumes are low. Price action sort of suspect. We're going to trade it anyways tomorrow, and it's going to be pretty good. Business will be back. So I wanted to cover that right away. Martin Luther King Jr. holiday today. Tuesday's quiet, going to be relatively quiet on the news cycle, on the economic data out here in the United States. I didn't see any market-moving events, but be ready. We've got key news events that are huge. We've also got the liquidity providers returning to their desks. And that's going to be a big deal, when it comes right down to it. So Tuesday business is going to pick up. I'm looking for big volatility tomorrow, pricing in sort of the events of the past 3 days. Wednesday, UK and CPI and Trump's speech. This is going to be key. You're going to have the Trump speech, which he can say anything at any time. We have no idea. A lot of things in play there, so be ready for when Trump talks. Thursday, U.S. GDP, PCE prices, and the EIA inventories. That's a big day on the markets. And then also Friday's the Bank of Japan decision. BOJ, that's early in that Friday session, that Friday Forex session. That is absolutely huge. The BOJ, we're sort of waiting on exactly what can happen. So what's the news for today? Martin Luther King Jr. Day. Limited liquidity. We've got a holiday. You know, if you're working in the federal sector, if you work for the government, you're probably not doing much today. Or if you're working in the banks, it's a bank holiday here in the United States. So, hey, you got that going for you. Monday psychology. Most Mondays are slow. This is a good day to be very, very careful if you take any trades at all. Primary objective on a Monday, every single Monday, holiday or not, is to trade to the positive and don't go into a hole. You don't want to dig a big hole. If you're going to cut your risk on any 2 days of the week, you cut it on Monday and you cut it on Friday. That way you can preserve momentum and generate momentum. Very, very important. Monday is the day that we get out of the starting blocks. We try to get going, get an idea what's happening in the markets, and then just get after it. That's exactly what we want to do. We want to get after it, but we got to do it on a positive note. Do not come rushing into Monday's session eager to trade, ready to take huge risks. You're going to get knocked out of the box. You don't want to do that. The worst feeling in the world is to walk away on a Monday down big. And I've done it. Believe me, I've done it. I don't do it anymore because it's absolutely bad for morale. And remember, your best trade's always tomorrow. It's always tomorrow. Tuesday, Wednesday, Thursday. If I'm going to lose, I'm going to make them beat me during prime trading hours. Tuesday, Wednesday, Thursday. That's when we're looking to get in there and make the money. Monday, all Mondays aren't alike. I like to take it slow and move in. That's why our newsletter comes out on a Tuesday, our UK, right for the UK session. Okay, focus on analysis, game plan for the week ahead. That's absolutely right. We get in, we game plan, we look at our key levels, our key events. We already sort of outlined the economic calendar as it looks this week. It's fantastic stuff. I can't wait to trade it. It's going to be a great week. Not a whole lot of market movers. That's okay by me. That's fine. We're going to get some action. PCE price index Thursday will move it. Trump's speech will definitely move it. And then BOJ, Japanese yen, end of the week. That's absolutely huge. That's what we're going to be doing really for the next, 120-something hours? Something like that? Yeah, 96. Be fun. It's going to be a lot of fun. Focus on the analytics, game plan. Have it locked and loaded. Know what you need to do before you need to know it. If you can do that, then you're in business. All right, generate momentum. Let's get it going. It's all about momentum. Life is about momentum. Trading is about momentum. We want to get out of the starting blocks well. We preserve momentum on Friday with our no donation Friday strategy. And on Monday, we generate momentum. And how we do it, we start slow, we start small. We don't go into a hole. If there's a small profit on the board, maybe we take that and we walk away a winner, knowing that Tuesday, Wednesday, Thursday are going to be the bell cow for us. That's going to be our meal ticket. That's what we're going to have to get accomplished. So that's what we're looking at doing today is game planning. And by doing that, I believe that looking at the news is going to be a real big deal. And we'll also look at some of the key markets that you guys want to look at. Okay, let's go ahead and have a look here. All right. I got way behind on the live chat, guys. My apologies. Let's see. Eyes. Okay, OG got it. 300. The truth shall set you free in 26 until infinity. Laugh out loud, no cap. All right. The truth will set you free. There's a lot. You got it. There's a lot of truth coming this way. That's a fact. Let me see. Tina Jin, good to see you. Tina, welcome. How are you doing? I'm confident you're doing well. I think we're in for a nice big trading week. Let me see. Eyes. The Dow Jones and US 100 both started with a bearish gap today. Like I said, neither one of those opened on Wall Street. There is no cash action. It's all derivatives action. That means the markets are small. People don't really know what's going on just yet, so we've got to be very, very cautious about what we do. We do see a big bump in the VIX, the volatility index from the CBOE. That's up about 20%, and the reason why is going to be our news. I'm going to tell you that here in just a second. Let me see. T. Marina Shane, on which time frames are best to look for the L and Bs? The B is going to be intraday, so you're going to be looking at that on a 30-minute time frame for commodity futures. Yeah, pretty much all futures contracts, but it's designed for commodity futures because they're very liquid. But as far as that, 30-minute chart. As far as L's you do on all time frames. So it's a big move. It hasn't reached in WTI crude oil. Interesting. See, we're having internet issues in WTI crude oil. Interesting. See, we're having internet issues. We've had these things, and they're at the server. They're not with me. Okay, so we just cut out a little bit. So if I lost you, I think we're back. All right, my charts are back up. All right, let's see. Middle East pandemic, you're accurate. All right, fantastic. Let me see. T. Marina, the Swiss was also neutral during World War II. Sure was. That's for sure. Andrea, good to see you. Andrea, welcome. Let me see. Capitulation on futures. Yeah, I mean, there's just not much going on in futures today. We got a move in gold. We're going to look at that in a second. Is the US 100 the same as the NAS 100? Absolutely, Angeli. The US 100 is the same. What it is a CFD product. The NASDAQ 100 is the underlying index. And then if you're trading futures here, like in the United States, you're looking at that E-mini NASDAQ futures, which is NQ. It's all the same. It's all the NASDAQ 100. So, yeah, absolutely right. Let me see. You got it 300. You sound like you have a heart for the community of traders. Not enough of that going around. I am a trader. You got OG. I am a trader. I know exactly where you guys are and where you've been. I really do. Been there, done that. So I relate. And a lot of people a lot of these guys on YouTube are going to talk down to you. They're going to talk down to you because it's sort of the new thing, the big aggressive thing. Everybody's sort of a tough guy. They're trying to be Andrew Tate, maybe even Nick Fuentes to a certain degree, trying to be real aggressive and be edgelords. I'm not an edgelord. And I'm not going to talk down to you. If you lost a bunch of money today, it's okay. You got to figure out why you did it and don't do it again. Believe me, when I lose big, I tell you guys. Last summer, that gold, I haven't forgot it yet. That gold trade that it took 3,600 from me in about 15 minutes. I remember it. Wiped out a little bit of work there, but you keep fighting and you get it back. It just takes a while. Let me see. Hey, Shane, Nico Letterman, good to see you. Hey, Shane, any Forex pairs you're looking at right now? Yeah, we're going to go ahead and look at the CAD yen. I think there's a great level there, and we also went over the dollar Swissy that I'm looking for. Got some latency going on. Yeah, T, the server space here in the United States is ridiculous. Don't know what to say about it. Okay, let me see. Droopy. Hey, Shane, I've been away for a little bit, but when you were calling silver at $30 an ounce, now some are talking about a boom in copper. Can we look at those charts? Yeah, we'll look at silver, copper, and gold, and then I'll also go over the CAD yen, and we'll probably be ready to sort of sign off, but I do have to cover the news at some point. I want to go ahead and recap this. This was our time price offering chart. If you're brand new, we're not going to spend much time on this, but I want to show the results of the trade. Not really to pat myself on the back, but I want to show you guys exactly what Market Profile is designed to do. Now, if you look at the chart, we posted it in the live chat, or go back to the stream from Friday, you'll see that this right here was sort of the formation. It's a capital B formation. Boom, boom, okay? That was the formation. Our point of control was right here. This is what we call K period. All right, K period comes across the board every day from 2 to 2:30 p.m. Eastern. Typically towards K period, towards the end of that session, the end of that, you're going to see a spike in volatility participation. You almost always see it. So let's go ahead and show you exactly what happened in that chart. It really was great, and I could almost hear my uncle who's passed away, R.I.P. He passed away back in 2011. Yeah, right after I started 2012. When he passed away. But I remember him. He was a market profile trader and one of the top on Wall Street back in the 90s. He was very, very good as a crude oil trader. And one of his favorite things was the B formation. And he would go, okay, that's a B. And immediately we saw the B. And what a B is you've got a value area here, you've got a value area here, and you have in here what we call a void. Now, the basic premise of market profile for intraday traders, and this goes back to the old pit days, is that price finds a value area. Okay, it finds an area, does a lot of business, and then it moves. So we had a bunch of business done down here. We sort of saw the move through here, and then more business up there. That was the premise of the B formation. So we entered a short trade. We came in and I said, okay, point of control's right here. Let's go ahead and sell this market. And the idea was very simple. If it rotated back up above the previous 30-minute bar, I was going to stop myself out. But our goal was right down in here. We bet, essentially, that we were going to go from this value area towards this value area, and in doing so, fill that in. We executed it absolutely beautifully, and it was a great example of what you had developing in the market. Is this a B formation today? A lot of folks are going to say, is it a B formation? You can't do that today because, number one, it's a holiday. It's starting to set up, though. You'll notice right here, a lot of business here, a lot of business here, point of control here. Okay? Let this simmer. Wait. You come back tomorrow after 9 a.m. Eastern, WTI crude. See if the market has stayed here. Now, this is all messed up. The point of control is way down here. Price is up here. So theoretically, you'd say, okay, either the point of control, which is where all the business is done, is either going to move up or price is going to come back down and settle around the point of control. The big thing I would point out is it's not very far, 59.37 to 59 even. You've also got an early halt on the CME. You don't trade this today, but if you do see this structure going into tomorrow's session, it might be a comer. It really might be. You might be in a situation maybe to sell another B formation. The idea being sell this value area that develops up here and play it back down to this gap or maybe even to the downside value area. Going to be looking at that tomorrow. Good review. I got so many questions on it. I had to cover it. I absolutely had to cover it today. So that was it. If you don't know what I'm talking about, go back to Friday's live stream, check it out, and you can see. And those are all indexed over on Switch Markets on YouTube, or they're in the How to Trade trading room under past trading sessions. Definitely want to do that. Crude oil going up? Nah, maybe not. All right, so I did want to cover that. So we've got a lot of markets to cover here. Let's go ahead to the CAD yen. I wanted to start here. CAD yen, interesting. Bank of Japan gets involved Thursday. You're going to want to be on the ball for that. I'm probably going to include a lot of Japanese pairs or Japanese yen pairs in this week's newsletter and our video, our Switch On video, hot picks. That's going to be on Switch Markets YouTube. Right here, though, 38%, right around 112.25. That's going to be the zone I'm looking for. Can we get it this week? Maybe, and that's a big maybe. I don't know if we're going to get it or not. But if the BOJ comes our way and if crude oil relents a little bit, the reason why you're on the rally here today on this CAD yen is because crude oil's up. No question about it. And by up, I mean holding on. We should be seeing selling right now, and we're not because of geopolitics. Right here, we're watching this closely. If crude oil fades, and if the BOJ is a little bit more hawkish, then we may get a shot at this at the end of the week, 112.25 to 112.50. Definitely what I'm looking for. But 13-week EMA down there at 112.22. That's big. And then also 38% right there at 112.27. That's big as well. So we definitely want to take a look at that. Let's take a look at our MT5 platform. You can see that we've got a few markets that we're looking at here. I wanted to pull this configuration up because I don't do it very often. I think 4 is way too many to look at one time. But if you're looking at the dailies, notice the sort of the correlation or lack thereof. Gold, definitely moving higher. Silver, definitely moving higher. Silver's going to 100. We'll talk silver here in a second. U.S. dollar, Japanese yen, pulling back a little bit. Bitcoin USD pulling back a lot a bit, right? So what's the difference between all of these assets? I wanted to highlight this. Gold, safe haven. Silver, you have to consider it a safe haven at this point. US dollar, Japanese yen. The yen is a safe haven. It's a little bit different than most safe havens because it's used for diversification. But the yen, considered a safe haven. Bitcoin, considered a risk asset. A lot of people say Bitcoin's a safe haven. Have your money in Bitcoin over everything else. Well, safe havens all doing fairly well across the board. Even the dollar yen came down a little bit. Okay. Still, though, holding firm, right? What do you have today? Bitcoin, big sell-off. Keep an eye on that correlation between Bitcoin and safe havens. A lot of people say it is the safe haven for the next century. Maybe, maybe not. Right now, it's very much a risk asset, and it's highly volatile. I wanted to point that out before we get into sort of the nuts and bolts of our gold and silver market. So right here, let's go ahead and get into gold. Let's dive into gold. No arguing with the top side of gold. No question about it. Let's sort of get rid of our analytics for right now. The cup with handle has broke out. We are headed a lot higher, and I mean a lot higher. The beauty of trending markets is our technical analysis. Our technical analysis is pretty easy. What are you looking for in a bullish trend? You're looking for levels that haven't been hit yet. 5,000, new all-time high. We're going there. It's almost assured. Be very, very careful with just buying in, thinking that you can get lucky. Today, there's a lot of action to the top side. Gold's up about almost 2% on the futures market, and that's with an early halt. You see right here, your spot gold's up about 1.75%. So if I'm looking to trade this thing today, and I'm not, but if I was, we gotta get rid of this TPO action off that chart. Something like this is very interesting to me. Bullish break, and it is bullish, no question. What is this formation? Nice big move, cup with handle. There's your daily cup with handle. Break, sideways trade, and now we've broken. So now we're looking at what? 46.90. I'm looking at my first port of call up here is going to be right around 47.50. That's a quarter handle. That gives us a pretty good opportunity to get a little short-term price action to the bear. Nice two-way action there. I would be looking at that for the immediate futures, potentially being topside resistance, at least for a temporary basis. Don't get too wrapped up in what you're trying to do there, taking a position. That would be a very big mistake, trying to short this and hold a short. But this could be a great scalp. Keep an eye on our market analytics. I'll probably have a trading idea out tomorrow, but 47.50 could be a pretty good sell up there from maybe 47.50. Say that 5 times fast. Pretty good zone. Keep your eye out for a trade idea on that, though. I have no problem hitting gold to the short there as long as everybody understands it's more of a short-term position or a scalp. We are not trying to call the market. No way. A lot of people have gone broke trying to call the top of metals. You don't want to join that club. All right, silver. Silver's absolutely fantastic. I mean, this right here, for those of you that missed the analytics that we had, when we talk cup with handle, that's a cup with a handle. We called that out beautifully. I do have a soft spot for really basic formations. I do, and the reason why is that they work. The problem is Shane, can I make a living trading cup with handles? We haven't seen a cup with handle like that in years, probably. So the answer is no, you can't. They don't come around enough, but it's important to understand when you're looking at like monthly cup with handles, weekly cup with handles, dailies, those are really strong indications that we've got market direction dialed in. And the beauty of a cup with a handle, very simple. There's one top, there's that top, there's your cup, the pullback, there's your handle, a couple days of compression. I wanted 1 or 2 more days. We didn't have time. Boom, 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 and then you just are off to the races. So now what are you trying to get accomplished if you're a silver trader? You want to buy it. You can't buy it right now. I'm saying no. I'm putting my foot down. You guys are twisting my arm. You all want to buy. You want to get in there and be silver bugs and be silver millionaires. Can you do it from $95? God, it's liable to get really difficult. And I mean really difficult. So what I would look at doing is this. I would go right up to 95. I wouldn't be stupid, and by stupid, be greedy. There's no reason to rush in. If you're not already in, don't worry about it. Honestly, we just had a comment right there, Shane. You were talking 30% silver, or $30 silver last fall, saying maybe we scale in. I know one trader that did exactly that, did very well, did absolutely very well. This right here, the high is 94.65-ish, 94.75-ish. Okay, we're starting to see that compression maybe right in front of 95. Watch 95. If you want to scalp in front of 95, go for it. I wouldn't mess with the short side of this. But 95, more than likely, is going to be a port of call where we're going to hang out a little bit at, meaning we're going to trade it for a little while. I know that's very scientific. We're going to trade it for a little while, but probably will. 92.50 was boom, 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 bang. And then we're heading north again. More than likely, I think we're going to see a little bit of ricochet action right around 95 before we head up. And in my opinion, we have come a long, long way to not test 100. So there's a lot of institutions out there that have a lot more money than you do, and they're looking at $94, and they say, okay, we're going to 100. Let's go ahead and just buy it, sell it 100, and we'll take 5%. Now, from a derivatives trading standpoint, that's very difficult for us to do because we don't have enough money to hold the position. You could easily see a big pullback from 95. Could go down to 90, 88. That's why all the silver margins have been adjusted pretty much around the world. So the volatility is huge. But there will be those institutions in there. Maybe it's a JP Morgan. Maybe it's a Goldman Sachs. They'll show up with a few $100 million, and they'll say, okay, let's buy silver and take a quick 5%. That's a great trade. And if you have the money to do it, it's darn near a sure thing. The problem is when you take a leveraged position and you have like 5,000 in your account, and you're saying, okay, Shane says it's going to 100. We think it's going to 100. I'm going to buy 94.50 and hold on. You can't do that because if the price goes down to 92.50, you're out. Your margin money's gone, and you're sitting around talking to yourself going, man, I'm going to get left out, and I'm going to lose. So that's why our trade locations have to be absolutely fantastic. And to be honest with you, a market as active as silver, they have to be flawless. They have to be flawless. So what do I mean by that? I mean, you're probably going to have to buy pullbacks. If you want to scalp it, I would be looking at a 4-hour chart, maybe probably looking for a little bit of a run up and then a pullback right down in here, and then maybe taking a bid. But I would definitely be not doing anything till tomorrow. The trade for me is going to be selling right up in front of 100, say maybe 99.50, maybe 99.25 to be aggressive. That's going to be a pretty good trade. That's going to be one that probably those same institutions that decided to go, 500 million in long silver now and ride it to 100. Those same institutions are probably going to turn around at 100, exit their positions, and then short on the futures market to make more money on a pullback off of 100. Believe me, if I'm sitting in one of those boardrooms or if I'm sitting in one of those firms and I've got all that cash in my disposal and they're saying, Shane, make us some money, that's exactly what I'm doing. I'm going to say, okay, we're going to have a big month, gentlemen, ladies and gentlemen. And that would be the plan. Remember, the institutions, the people that were trying to jump on their coattails, a million YouTube videos out there saying the institutional footprints, we're following the money. Okay, well, remember institutions, when they trade, they're not looking at 1-minute charts. I mean, maybe that's a difficult one to talk about. But when we're talking about big money, I'm not even talking about 20 or 30 or 40 million there. I'm talking big money. I'm talking hedge funds. I'm talking billions. I'm talking governments. They're not looking at 1-minute charts, 30-minute charts. They're looking at their books. They're looking at macro trends. That's a trade right there that'll be macro driven. Think about it. What if you had a chance at a risk-free 5% and you knew it was probably going to mature in the next few weeks and you had a great chance to get in? I mean, what's 5% of a 300 or 400 million? It's a lot of money for maybe a week's work. Maybe 3 days. The way that silver's going up, that you could legitimately get that in the next day or so. Just really depends on how the macros line up. Interesting stuff right there. Okay, we did have a request for copper as well. I'm going to go ahead and get that. Okay, so here's a good look at your copper. This is going to be a CFD. This isn't the spot contract, but it'll give us a pretty good look of exactly what's going on. As far as what should we be doing? Well, the biggest thing to remember here is what? This is almost the same type of situation as your cup with handle, right? Except it's not really developing for us with copper. Daily, you can see right here, the sort of the same formation that we saw a few days back that developed in both gold and silver. Sort of there's your top, there's your pullback. This one just rallied and pulled back, and now you're sort of looking at some junk. So I could definitely say we have a cup with a handle on up here. I could say that, but look what happened. Okay, it's not the end of the world. We're not ready to abandon that idea just yet. We can say, okay, there's our top one, there's our pullback, there's two, right? So maybe our handle's sort of settling down. But what we're going to need to see is some compression and then potentially a break. So I would call that a much dirtier formation. It's not as clean as the one we saw in silver or gold. This weekly, probably more of what I'm talking about. Okay, clearly the world ended for copper right there on the 28th of July. That was the end of the world, off about 23% in a week. Whoa, that one hurt bad. I mean, that sent people to the unemployment line. It really did. Now this right here, spike low back on November 17th, and now you sort of got these highs right up in here that are developing. What do you have? Spike low right off of our moving average, spike high, pullback zone. You're going to be in pretty good shape with a pullback. The one thing I'm a little bit sketchy about here is going to be that hammer, but it's not a perfect inverted hammer, but it definitely does signal sort of a reversal type of a motif in this market. I'm not really buying it. I think metals are really strong. An opportunity down there at 38% of support, 575-ish. It's going to give you a legitimate trade. I mean, that's not a bad one. If you wanted to be more patient, 545, maybe 5.5, 550 down there in that Fibonacci golden zone, that could be an ass kicker too. I mean, we just got to sort of wait. We've got to be very careful with copper because it's certainly showing a correlation with the other metals. I mean, let's go ahead and pull up our monthly. Getting our way back machine. Okay, we shattered the 2011. There's your financial crisis right there. We shattered that. Got an opportunity here, just sort of a definitely a nice bullish trajectory. That was really the horrible thing, the July of 2025 that just ended a lot of traders. But look, you filled in, and now you're sort of trending. You're right at that zone. So I would definitely maybe be looking at 6 even as being a big deal, huh? 6 is key. Couldn't establish trade up there. 618's your high. Be very careful around 6. Probably buying pullbacks. If we get established up above 6 more than likely is going to be topside support. Let's check one other thing here. Let's go ahead and see what we've got with we want spot. We want copper spot. What's a spot? All right, copper spot. Let's go. That's gold. Let's try right here. Well, this is something completely different. This means this right here is telling us that what is this like for a 12,000 divided by 6? What is that? That's for a ton of copper, isn't it? 2,000 pounds? No, I'm way off on that. 2,000 ounces? Yeah, 2,000 ounces, 2,000 pounds. Yeah, I wish, right? 2,000 ounces. We're not even going to look at that. It's going to confuse everybody. We'll continue with the. Let's go right here with copper futures. Copper futures. That's going to be HG. That's a continuation. Okay, this is a good look at what we need to be looking at. 6 an ounce. So that other CFD, that spot copper was for 2,000 ounces, it looked like. Yeah, something like that. Yeah. All right, so 546, I mean, that's your happy zone right there on a continuation. This probably would be more representative of a true copper spot type of a contract. I like 5.5. I like it a lot. Something like that would be pretty good. All right, let's go ahead and take a look. We got a few questions, and then we'll go ahead and sign off here. Got a lot going on. I got a lot on my plate for today, that's for sure. Let me see. Ahmed, Shane, your recommendations for the Asian session, approaches, things to pay attention for. The first thing to watch out for in the Asian session is going to be the futures market action after Tuesday's electronic open, which is going to be at about 6 p.m. Eastern today. Be ready for movement in the U.S. indices when those markets open. Be ready. That's what I would look at as far as Asia goes. And then also be watching the yen. I don't think you're going to get a huge amount of action on the yen, but you may. You definitely got to be checking that out. Let me see. Yes, sir. I love my joy. I enjoy trading safe havens. Well, right on. Whatever you like. Yes, sir. Whatever's easiest. Japanese yen. Okay, we'll take a look at the dollar yen here in a second. FX lovers, I'm happy to be here. Happy to have you, FX. Yes, sir. I feel the yen will be going higher. Let's go ahead and take a look at the yen here. I'm on a couple of different approaches. I've just sort of showed you Fibonacci's and key levels thus far. Let's go ahead and maybe look at a few other strategies potentially for this week. Big gap on the gold 4 hour. Yeah, gold's crazy, and it's because of the holiday, the lack of participation. Markets go directional in a hurry. Let me see. Last Friday it dropped 1.8% and it reversed back today. Don't take today's price action to the bank. It's not real. It's what we call a fugazi. It's a fake. And the reason why it's a fake is because there's not as much participation. Real easy to get those big swings in price action when not as many people are trading. And that's because the U.S. session is closed today. A lot of the hedging that folks do with derivatives against their cash holdings, That's predicated upon the U.S. cash open, and we didn't get it today. So be very careful trading for the rest of today. Lebo, I was going through last week's chat, and I saw U.S. oil had a huge spike on the uptrend, and I missed it. Damn, I'm so mad at myself. Don't get mad at yourself. We don't worry, and we don't get mad about the trades that we miss. We learn from them, but we don't worry about them. We worry about the trades we take. So what? I missed last week's lottery ticket numbers. You know what I mean? I missed buying Bitcoin at 5 cents a piece. I missed Denver beating the Buffalo Bills in that playoff game. What horrible officiating. I don't know how the NFL is going to stay in business. The games look rigged at this point, but unbelievable. Saw the same play yesterday in the Rams-Bears game, and it was called the opposite way. Unbelievable. So, yeah, don't worry about the ones you miss. You know, if you're going to sit there and dwell on the trades that you missed, you might as well dwell on big ones. Dwell on, like, not having the lottery numbers from last week. Dwell on not buying gold at $300 an ounce in 2015. You know, dwell on something good. Don't dwell on one oil trade. I missed it. Who cares? There's going to be more, Lebo. Don't get yourself down. You can't do that. All right, FX lovers. It's me, Emmanuel from Nigeria. Been a long time, Shane. Happy New Year. Happy New Year, FX lovers. Good to see you, Emmanuel. I remember. Good to see you back in the room. Okay, guys, we're going to look at the Japanese yen. I'm going to hit the news, and then we'll call it a day. A lot going on in the market. Dollar yen, love it. Love the market structure. Dollar yen's a great pair to trade. If you're not already trading it, it's one that probably is worth diversifying into. Volatility is beautiful. That is a beautiful thing. That's beautiful to me. I see that and I say, wow, it's like a beautiful sunset, you know, or catching a 10-pound largemouth bass or something. That's beautiful. And you're looking at this, and I mean, there's a spike low, there's a spike high. Pullback is right to the back end of that golden zone. Your low there is 57.42, 157.37. That's a beautiful thing, really. Probably bidding 157.50 somewhere in there. That was a trade that a lot of folks got. Now, what can we say about the yen right now? What are we looking to do here? Well, I mean, you can look at it a couple of ways. You could be saying, okay, I'm going to lay off it for now. You could run some Fibonacci's this way and try to get a sell going. You really could. And maybe that zone right there is worth looking at as topside resistance, something right around 158. I don't necessarily think that that's a bad thing. You could probably step up and sell just beneath that zone and look to get maybe a bit of a pullback. Just be very careful. Once the market breaks, if it does break, we could be going much higher. And I expect this market, as with all markets, to move here in the next 12 hours. So be careful if you're taking a position there. Let's go ahead and see what our coded 920 EMA strategy has to say about the Japanese yen. I get asked this a lot. Shane, what's the that's the natural gas. They always come up like that. In any case, okay, so what can we say about the Japanese yen? Daily chart. There it was. There was your bid back on the 6th of October. That was a massive trade. To trade the 920 EMA crossover on the Forex, I love the daily time frame and the 4-hour time frame. You can apply this to any time frame you like. You just got to be very careful you don't run into flat markets. Typically, the lower the time frame you go on the Forex market, the flatter price action gets. So if I'm looking at this daily chart, I'm saying, oh, this is interesting. You're looking for the 9, which is the red EMA, to cross over the blue, which is the 20, and that's going to give you either a buy or a sell if the 9 crosses onto the 20. I'm watching this closely. You got an interesting type of a situation here. We're not even close to crossing over. So see exactly what's going on the 4-hour chart. 4 hours, another great time frame. Okay, so this is interesting. Sort of there was sort of your big rally going back to the 7th of January, just an absolute banger for like 2 weeks. And now you've got a sell signal setting up. So you have to be sort of cognizant of what's going on in this market. Number one, you have a holiday. So the question is this worth anything? Is price action today worth anything in the dollar yen? I don't think so, but maybe. This was the sell signal right in here. So your short pretty much hasn't done anything. You got the nice big open to the downside, which would have been good for what? You sold 158, so you'd have been down there at 157.42. Pretty strong move, about 50 pips. As far as what you should do now, I'm not really interested in trading anything based on crossovers, especially on a news day, but we will be watching this 4-hour chart for the dollar yen as we roll into tomorrow's session. Business will pick up. Let me see. Nico, how do you expect a market to move in the next 12 hours? Very simple, Nico. What we've got is a holiday here in the United States, Martin Luther King Jr. Day. It means you've got a bank closure. It means you've got folks that aren't really interested in trading today. When we open, after today's electronic open in the futures markets, the next Forex trading day. As soon as those futures markets open, you're going to see a rush of action of traders that are trying to get the jump on tomorrow's session. So when I say 12 hours, it's right about noon my time. So I'm looking at the markets to really pick up and start moving by midnight, which would be going into that London session for me. So I would be looking for some movement right around that Tokyo Open today and into the London session, and that's because business will pick up. We'll see volume hit the markets. Now, I'm not saying it's going to be dramatic, but I expect us to get some moves in once everybody gets back at their desk. And here's the reason why. Okay. This is the news. Greenland. Trump is very serious about Greenland. We've seen tariffs. Tariffs went in against EU countries. It was 10%, I believe. Now Europe weighs using a trade bazooka against the U.S. as the Greenland crisis deepens. It's not a crisis, but what you're going to see is potentially the United States move on Greenland. Don't think militarily here. Don't think, the United States is going to do airstrikes. They're not going to hit anything. There's nothing there to blow up. I actually had an opportunity to fly over Greenland on the way back from Greece this last fall. And when I was flying over Greenland, I looked down and I go, damn it, there is nothing there. And that's no offense to anybody living in Greenland. It's just like I looked down and I said, that is a giant mass. And that's a lot of ice. And it looks like there's some thawed spots around the coastline. But holy cow, that is a massive place. And there just wasn't much there. There's not much development there, and a lot of people believe that Greenland's almost the next frontier for the coming 5 to 10 to 15 to 25 years. The reason why is because for whatever reason, a lot of folks believe that the climate is changing, the world is warming up, and that a lot of those places that were impassable, the ice sheet up there, a lot of that water stayed frozen 365, 24/7, 365. A lot of that is going to be opening up a bit. And then it boils down to who's got the icebreakers in this world. Russia has a tremendous number of icebreakers. They can open shipping lanes. China has icebreakers too. The United States, not so many. So that piece of land is really strategically important for a lot of different reasons. The United States believes they need it for security. They also want to go looking for rare earth minerals and energy. It really is an untapped land mass, an ice mass that's absolutely huge. So when we talk Greenland, it has nothing to do with the people or the politics of the region. It's nothing like an Iran or a Venezuela. It just literally is resources, and the United States right now is looking for resources under the Trump administration. This is very serious. One way or another, Trump's going to make a play to get it. You may see boots on the ground. You may see some tanks and stuff roll in, but honestly, it's not going to be a military incursion. If it's going to be a major military standoff, I would be shocked if it ever happens. I think what you're seeing right now is negotiations. It's tit for tat. I believe the offer to Denmark for Greenland was $700 billion. So that could be a potential place where they make a deal. Remember, Trump's all about the art of the deal and making deals. This right here is just all the pretext for signing some sort of agreement that the Trump administration is happy with. Will it happen? Yeah, it's going to happen. It's going to happen. It's going to happen in the next 6 months. Interesting stuff here. Iran, we're still watching. We're watching Iran very closely. Iran strikes could signal limits. Iran strikes still very much on the board. We saw some saber rattling over the weekend. The protests against the Iranian regime, violent. They turned violent. I believe the body count was somewhere around 5,000, and that's unbelievable. I mean, to me, it just blows me away, the level of violence right now all around the world, but it's the reality. That's the world we live in. 5,000 is big. That's a huge number. I think that you're going to see the United States. I don't know that they go in now, but it feels like there's something coming. We talked about regime change Friday as well. There's something coming here. I'm watching this very closely. In my opinion, the threat of strikes against Iran, secondary strikes against Venezuela, and also rate cuts heading towards the U.S. dollar are the reasons why you see $59 crude oil. I don't believe you're even close to $59 crude oil without all this uncertainty. We'll talk a lot about this as the week moves on. Iran strikes could signal limits of Beijing and Moscow's power. What do you think that means? And I know it's Fox, but I mean, this is crazy right here. These headlines are absolutely unbelievable. What you're seeing is you're seeing the world as we know it go through a major transition period. And it's going to impact everything from markets, everything from corn to crude oil to shares of Chevron stock or shares of GameStop. It is all connected. And what we're seeing right now is three major powers making plays for as much as they can get. You're seeing the United States is definitely out front. You have to put them there. You've got Russia also making plays in the Ukraine and Eastern Europe. And you also have China. China's looking to make plays in the South China Sea, Taiwan. There's even been saber rattling between China and Japan lately. This is one of those periods of history where to say that nothing's going on is just to have your head in the sand, and to understand how these things are likely to move the markets can be invaluable to a trader. It's going to shake commodities. It's going to bring market angst, as you saw in the VIX up 20% today. It's going to bring angst to stocks and risk assets. But when things settle out, you're probably going to come back and resume whatever bull market you were in, except with commodities. I think commodities, especially energies, are in position to come way off by this time next year. Metals, are they ever going to find a top? I don't know. Those are the big ones right now. Greenland, Iran, and there's one last one, the Insurrection Act. This is a big one. A lot of us believe this is going to be announced in the next several days. Widespread protests in Minneapolis. You see Trump backs down on an Insurrection Act. He's probably going to launch it. Now, they don't want to launch the Insurrection Act because, well, it's bad for business. It's bad for business not only regionally, but politically. In an election year, launching the Insurrection Act is not a good thing. The last person that did it was George H.W. Bush, George Herbert Walker Bush, which was 1992, to stop the riots in L.A. Those were bad riots. Those were big riots. And what you're seeing is the same type of thing developing in Minneapolis, Minnesota. I had friends in Minneapolis years and years ago. Beautiful city. Right now, it seems to be hanging by a thread. And what the Insurrection Act is the United States government sends troops into a local area that has been compromised, that is showing signs of chaos ruling the day and lawlessness. And that's exactly what you're seeing in Minneapolis. So a lot of us believe that the Insurrection Act is coming. Doesn't matter what the judges say. Doesn't matter what anything says. Trump enacts the Insurrection Act. It means you have U.S. troops on the streets, restoring order. Things like curfews, things like business closures, curfews. A lot of people being detained. You got to think about what an Insurrection Act means and what troops on the streets mean. It means that the potential for violence, a big mass casualty event, is going to go through the roof. It means that a lot of people are going to be detained, more people than could be held at local jails and things. So where are you going to put them? You're going to have camps put up all of a sudden. Politically, it's going to look very, very, very bad. And that's why Trump hasn't done it yet. However, it looks like it's going to happen. And this is fascinating to me because I haven't seen it since 1992, and I was just a little kid. But I remember how bad the situation was in L.A., and I remember the Army going in there and restoring order, because it was out of control. Insurrection Act invoked by. Here's Poly Market. What do you got? March 31st, 31%, something like that. June 30th, 38%. December 31st, 52%. So it's 50-50 whether the Insurrection Act is invoked by the Trump administration this calendar year. I think that's going to be a real challenge to do, but we could definitely see it coming our way. What happens to the markets if the Insurrection Act is declared? Anything. Risk appetite will drop for United States assets, no question, at least in the short term. And the biggest thing to remember about the Insurrection Act is I have no doubt that if they put the military in Minneapolis, they will restore order in there very quickly. Very quickly. Things like mass casualty events, standoffs, protesters against troops, kinetic exchanges, not good. The other thing is this. If the situation was to balloon and to get out of hand, and if all of a sudden you saw the Insurrection Act meaning troops in every major American city, a lot of folks around the world are going to take note of that. Folks like China, folks like Russia are probably going to make moves. It opens up a can of worms that is, quite frankly, unprecedented. We haven't seen this since 1992. And when Bush, and believe me, everybody in the White House knows this, H.W. Bush did that didn't win re-election, lost to Bill Clinton. And a lot of people believe it was because of the situation in Los Angeles. It was because of the situation with the Insurrection Act. This is all fascinating stuff. It all ties into what assets are going to be hot and which aren't. I'm still very bearish energy futures, energy commodities. You can't help but be bullish metals. Risk assets, I'm still bullish, but there are these market drivers out there that could be a major bump in the road, and it could really break you down quick if you're taking leverage positions to the long. All right, remember, switch on. Go ahead and sign up for our newsletter. That's delivered for you each and every week before the UK session begins. I'll have a lot on these geopolitical events this week, and then we'll also look at some key levels as well. We'll have some trade ideas, and you can also just check it out. And then also our video. We put out a video pretty much every week, and you're going to want to be checking that out at Switch Markets on YouTube. That is going to be our Switch On Hot Picks. All right, everybody, I've gone on for an hour because it was a big session. It was important that we got into some of these things. Couple of things right here. Let me see. Libo, not just U.S. oil, but U.S. 30 had a huge spike last week, and I missed them both. Don't worry about the ones you miss, Libo. Don't worry about the ones you miss. Eli, what are your PC specs? GPU and CPU mainly. Oh, man, that's a long story, Eli. I really lean heavily on my processors. I got to have cutting-edge processors when I'm trading because the processor is what makes you fast. I like to have a lot of RAM as well. So I believe this machine has an Intel i9 in it, and I believe it's third or fourth generation. I'm not sure. It's fast. So if you're getting lag, it ain't my computer, and it ain't my internet connection. I promise you that. It's got to be running through the servers over at Restream.io. It's got to be if there's lag. Something to think about there. I'll have to look up the exact specs, Eli. I might have to look at it. I don't remember offhand. I think it's 32 megs of RAM. I know it's an i9. I think it's a second or third generation i9, Intel i9 processor. And I believe the RAM's 32. I believe. It's built for speed. It's not very big. It's only like that big. It's fast, though. All right, no worries. Tina, a lot of history about Greenland. Honestly, Tina, I would have to look into it. I would have to look into the deep history of Greenland. I'm not necessarily sure. I'd have to look into it. All right, everybody, that's a wrap for today. Have a fantastic trading session. If you want to speak with me or send me a private message, go ahead, head on over to Switch Markets, head on over to howtotrade.com. Go ahead and send me a private message. I'll get back to you in short order. A lot going on today, so we're probably not going to get a trade idea today. We'll have one tomorrow, but you're going to get the newsletter, so that's pretty much just as good. That's a wrap. You guys have a fantastic trading session. As always, trade the action well, and we'll talk soon. See you.